So let's talk about money. Where is the clicker? Let's talk about money. We do a little break right now away from the use cases. We'll come back to DAOs and we'll come back to the tech, full tech stack a bit later. But let's talk about money. Last year, just VCs, yeah, this is only VCs. This is no hedge funds. This is no ETFs, no ETPs in crypto. Just VCs invested $33 billion into blockchain startups. In 2017, when we started, it was 3.3 billion. So that's basically around 78% annual growth. What struck me, and actually thanks a lot, Xiao, it actually comes from the presentation you recommended that we look at, the Digital Galaxy Research. And what struck me is that not only this growth, but also the fact that just value-wise, the amount from growth stage was significant. And if you double-click on growth stage deals, there is actually a backup slide on this. It's mostly trading vertical, which means exchanges, which means market makers, which means custodians, because those are cash flow generating businesses, and as a result of that, growth stage VCs can invest. Of the $33 billion invested into this segment, 22 billion was growth into 69 deals. 22 billion, it's a significant amount, and those were deals which were more than 100 billion in size. Also, interestingly, it's actually relatively small compared to the entire VC market. The entire VC market invested last year was $700 billion. 33 billion is only 5%, so we think there is potential to grow. And let's talk about the deal size. As I said, the growth stage, 69 deals, altogether 2,000 deals last year. So the growth stage volume-wise is actually very small. But what's also interesting is that actually Series A has been growing since last year's, and since 2019, 2020, which shows that the companies which we invested into, us or other VCs, during the bear market, like Agoric, for example, or Vega, are maturing and are able to raise now significant Series A rounds after that. Now, who is actually investing into these deals? US VCs. So we have some step up to do in Europe. And actually, last year, 49 funds raised on average $300 million. That's $15 billion raised capital. It's still small compared to the entire fundraising amount that VCs raised, which last year was $130 billion. It's still small, but most of them were actually US VCs. Interestingly, also 60% of the 49 funds that raised funds were actually those which also raised in 2020. So they're actually like super good at fundraising. Yeah? And actually some of them are our portfolio companies, so we see how they do fundraising. We go to their summits in the US. It's like it's really good. So we split the investors into three different segments. Number one are crypto-native investors. One of the largest ones is A16Z Crypto. The last fund they raised is $2.2 billion. They are raising a new fund right now, significantly higher than that. Another fund is Paradigm with $2.5 billion. Electric with $1 billion, and Polychain Pantera Multicoin from our portfolio as well. This is just one area of investors. The second area of investors are crypto companies' investment arms. So, for example, Animoca Brands is investing. I think Robbie said it previously. FTX just raised a $2 billion fund. Jump Crypto has a fund as well. Kraken, Coinbase. Those are basically the cash flow generating businesses from the trading vertical, mostly like exchanges and market makers, are also launching their own venture arms. And thirdly, there are traditional investors who are also entering crypto. Sequoia just announced a new fund called SBF, like Sam Bankman-Fried, CEO of FTX. It stands for Sequoia Blockchain Fund, and they raised $500 million for this. Bain Capital Crypto raised $560. Matthew from ANEC has around $500 million to invest. Thanks a lot for pointing that out. And also Bessemer has a crypto fund. Most of these funds, we assume that European VCs raised maybe $1 billion. European VCs, we know them, we are friends. Some of them we invest into, like, for example, Fabric Ventures here in the UK, or 1KX, or Outlier Ventures in Switzerland, Greenfield one in Germany. We are all friends, but you know, maybe together we raise 1 billion. 1 billion or 15 billion raised by all VCs is 7%, which much less than European VCs like Index raised, which is around 24% of the global VC fundraising. So we need significant step up to do, because otherwise, what will happen is that the current situation will accentuate. And what is the current situation? The current situation is that we have in Europe enough startups, blockchain and crypto startups, because 21% of all the global investments in crypto went into Europe, mostly led by UK, 29% UK, and then 26% France. So we have the startups, we have the developers, we have the companies, but it's mainly funded by American VCs. If you look at the chart on the right side, you see what is the percentage invested by US investors in Europe. And you can see, for example, that investment ticket size 20 to 50 million, 54% of those rounds were led by US investors. I let it sink in, yeah? And right now I would like to invite my fellow friends for a panel discussion about how do we all invest in crypto. So please welcome Xiao from KKR, Julia from Index, and Matthew from Van Eck. Can you, maybe to start with, give us your story? What is your background and how active are you in crypto investment? And maybe I would point out one thing is that let's not speak about Web3 only, but let's take crypto as a segment, you know, all the way from Bitcoin to, I don't know, gaming. So how active are you in actually crypto?
Yeah, happy to start. Thanks, Victor, first for having me today. So I'm Julia Andre. I'm a partner at Index Ventures here in London, and I focus mainly on fintech and B2B investment. For those who don't know, Index is a multi-stage fund, global. We're based in the US and in Europe, and we've been investing in tech for 25 years. Our portfolio includes companies such as Adyen, Robinhood, Revolut, Datadog. So our experience is really cross-sectorial, and we work with founders that we invest in from the very inception of the company all the way to building these multi-billion outcomes that we're looking for. So we're really supportive, active partners of the team we back. And so when it comes to Web3, I mean, for us, we've been looking at Web3 and crypto, as you mentioned, for a number of years. And we really see this as a new set of tools, a new set of technological innovation, really, that will be impacting horizontally all of these sectors that we've been investing in the past 25 years. So maybe almost similar to how AI disrupted all of the categories 10 years ago, we really expect to see Web3 technology and crypto technology impact you know, B2B SaaS, fintech, consumer and gaming, and all of these categories. And it's through this lens that we are investing in crypto, and always focusing on the customer need and the value generated for the end user, which is what we're always looking at when we invest in company, whether it is in Web 2 or in Web 3.
Thank you. Xiao.
Yeah, thanks, Victor, for organizing this. My name is Xiao Zhu. I'm at KKR. I'm a digital operating partner focused on tech and digital innovation. I also help co-lead KKR's blockchain and cryptocurrency efforts globally. My background before KKR is I was a tech founder myself for many years. I built a private enterprise blockchain startup in London, 2017. And in my earlier life, I was a professional concert pianist. So investing is relatively new to me, but I'm very excited about building new markets and companies. Well, KKR is, as you may know, one of the leading private equity companies in the world with 460 billion AUM. More and more earlier stage, growth stage technology investing becomes more and more relevant for our global teams. So we have a 2.2 billion tech growth fund active. We're looking to raise probably at the next fund, 4 to 5 billion. And crypto and blockchain really starting last year have become, a more core part of the overall strategy as well, because we do believe that decentralization will impact most of the sectors that we hold a lot of investments and portfolio companies in. So both from a defense perspective, the impact this disruption has on existing sectors and existing portfolio companies, as well as obviously on the offense. We do want to back the future leaders in the Web3 and the blockchain world. And it's relatively early for us, but as Victor has shown, 70 deals last year globally above 100 million. This is really starting to become very relevant, and I think our global teams are really starting to spend more and more time building relationship with founders from earlier stage and building partners in the ecosystem to build expertise and deal flow. KKR definitely wants to be a supporter of this evolving ecosystem.
Cool. Matthew?
Hello, everyone. Thanks for having me. Matthew Siegel. I run crypto research at VanEck. VanEck is a New York-based, family-owned asset manager, about $80 billion under management. 80% of that is passive, 20% active, I would say. And we have about $1 billion between our firm investments and client money invested in crypto. We have an index subsidiary that runs dozens of digital asset indices that are licensed by external investors. That helps us get the pulse of the market. We have 8 crypto listed funds in Europe, 7 single token and 1 crypto leaders ETN that just listed. In the US, we have 2 ETFs, Bitcoin futures and an equity ETF that buys crypto enablers. And then we've got 2 hedge funds that we've launched in the US, direct crypto. One is a lending vehicle, and the other is a layer 1 smart contract fund. We're going for the investors who've made good money in funds like Victor's funds and who are looking for beta or smart beta approaches. In the US, those have to be actively managed because of the regulatory backdrop.
Understand. And is there a number, like how much money you have deployed or are planning to deploy in like startups only right now, if you take out Bitcoin investments and passive investments? Is there a number?
So we seeded an early stage venture capital fund in the US. That's a $50 million fund. We've probably put triple that to work just from the firm's balance sheets. Your comment about the financial part of the market, the trading part of the market, exchanges, that's exactly what we thought from the beginning. So we started investing in the private rounds and FTX, Gemini, a number of non-US exchanges in Argentina, Nigeria, Philippines. Really the view is that the US is behind on setting a regulatory framework. It's going to be emerging markets who skip a technology generation, go direct to blockchain, and the exchanges are the gatekeepers. And maybe that moat is even getting wider now because of the regulatory development. So we still like those space. That's helped seed our information and deal flow, biz dev partnerships. But the focus now is on taking that intelligence and putting it into more liquid strategies.
Okay, interesting. We're actually seeing right now quite many interesting opportunities in terms of like regional exchanges, EBITDA positive, cash flow generating, whom like additional injection of capital could really boost their growth and geographic expansion. So we should definitely talk about that. And any number for you guys, Julia and Xiao?
So for Index, we don't see crypto investment as a separate thread, right? So it's the same team doing it, and we're doing it from the same fund. So Index deployed $3 billion every 18 months, roughly. And we expect that a chunk of that will go through Web3 and crypto companies. If I look only at the past 6 months, we've done multiple 2 million seeds, and we've invested all the way to 50 million gross rounds. So this is the type of range that we'll be looking at.
Okay, cool. Xiao?
Well, for KKR, there's no number. We're embracing this new world. We probably, the early efforts we have already deployed probably a few $100 million dollars into like direct investments and LP investments. But obviously, in terms of direct investments, we're looking also at later stage deals where we are looking also to lead the round. And so Anchorage was the first publicly announced deal where we led the last Series D. That was a 350 million round, and we did 100 million. So
Cool.
I think, yeah, more types deals like this is sort of more in KKR's sort of
Okay, cool.
sweet spot.
And how do you look at valuations? Mostly, I would say like early stage valuations, yeah, because that's like our bread and butter. And interestingly, in that study, Xiaoxue, that you sent me and I used here, there was a slide which showed that actually compared to traditional VC, the crypto rounds in terms of valuations are 140% more expensive. Yeah, and we just invested into a seed round at 1 billion valuation. Which, like Andreessen said, it's the new normal in crypto, yeah? So how do you look at these valuations?
When we think about valuation, we really take into account the size of the opportunity, right? So it's what's the size of the opportunity and what is the long-term value creation for the end customer. If you look at how we invest, about 75% of our deals are done at seed or Series A. So it's very early stage. And we are long-term supporters of our company. So when we invest, we know that we're going to work with them for 6, 7, 8 years, whatever the time is to build a large outcome. So it's really about, finding these unique companies that are attacking very large market that can support outcomes of the site that we need to return the type of funds that we have.
Yeah. Xiao and Matthew, do you have a view on valuations?
Very difficult question, of course.
I know. That's what I'm asking.
I think this is one of the things. I do believe price discovery across all types of assets in the blockchain space is still very immature. I think people will figure out a way to benchmark, create sort of averages. There's not enough historical data. The space changes so fast. The pace of innovation is so fast. I haven't come across very convincing sort of valuation methodologies. Obviously, looking at multiples to similar companies in a non-crypto space is probably sort of an easy way now. But at the same time, you also realize that the premium's pretty significantly like higher in the crypto space if you use the same sort of multiples on revenue or EBITDA. I think we're also trying to figure it out. And if you think about, when Robbie was talking about blockchain gaming, right? If you have a company that is basically predicated on the issuance, primary issuance and secondary trading of NFTs, right? Or a certain fixed supply of digital assets, then the revenue that you generate from issuing these tokens, how do you actually evaluate that? That's something that we are also like trying to figure out, because it's not a traditional sort of gaming economics or SaaS economics. It's something entirely different. And I think there's still a big spread in terms of how the market view, the quality of these sort of data points.
Cool.
What was the percent premium you said?
140.
Okay.
140.
So we think the margin profile of many of these companies will be much better than what we see in kind of traditional networking businesses. So it's not surprising to see a higher valuation. And then for the exchanges, I mean, you know this from being a Solana investor. Like, if you think that Solana's network is going to eventually form the backbone of a new NASDAQ that trades every type of security on the blockchain, then you can compare those two market caps, as we did last year, and make an asymmetric bet that Solana will exceed NASDAQ, and that played out. But at the seed stage, it's really, as Julia said, identifying the size of the opportunity, betting on the right team, and not getting too scared by the high valuations, given that the margin profile should be better longer term.
I fully agree. We had a big discussion about this with our investment team, and in the end, we said, let's just forget the valuation. Let's just think about 5 years from now, which is our average investment horizon. Is it going to return the fund? Yeah. Are we going to do 10x, 50x, 100x? And maybe we'll hit another Terra, which became 100 billion valuation. Actually, it is right now 100 billion valuation. just compare it to, for example, UiPath, yeah, a big success story from Central Europe. Right now, I was just speaking to someone during lunch, I think Václav, it was you, yeah? Currently valued at 15 billion, yeah, cash flow generating company versus, these crypto companies, Terra at $100 billion and Solana at $50 billion. So that's how we look at it. Yeah, it's basically like, what can we get 5 years from now? And then, what is the ticket we need to put right now to get for this investment to return the fund? Are you also using some kind of valuation models, or you just know that it's imperfect, that you basically base your decision on the team? Julia?
At an early stage, we wouldn't use a valuation model, no. It's really, as you mentioned, is like, what will it be worth? And the end game is what matters to us, because we are long-term holders anyway.
Yeah, okay.
No set one. I think for each deal, it's a different. I mean, you can't generalize for the blockchain and crypto sector as well, right? I think.
But still, if you are investing like later stage, cash flow generating businesses, you can just use DCF based on valuation on these. So yeah.
If it's a trading exchange, then that's different from a play to earn gaming asset.
Okay.
Yeah.
When it comes to valuation, I'm spending more of my time on a valuation framework for the layer ones, using staking yields and fees, and trying to get an estimate of what consensus believes will be the value creation over the next year. And I think some of the staking yields that we can track in real time help inform what the market expectations are for a given protocol over the next year. Yeah.
Okay, cool, interesting. We should discuss that too. So, Web3, how do you actually generate deal flow in Web3? Because like what we also see is different from traditional VCs, that still Web3 VCs co-invest often together. So because it's by definition is decentralized technology, so every investor helps then with a bit different skill set. How do you guys generate deal flow?
Most of our deal flow comes from our network. So we collaborate a lot with a lot of different investors at different stages and with specific expertise. And this is how we get most of our leads. And we do think it's a really good way also of doing Web3 investing on our side, because it enables companies to welcome on the board both an institutional VC that would have the company building expertise and a crypto-focused VC, which would have this network and technical expertise on the other hand.
Okay. Xiao.
Also, network strategic partners, right? Funds that we have invested in, or we have high convictions in, just ecosystem participants, and we also just reach out and build direct relationships with founders at an earlier stage, and try to be helpful as they grow, and once they become at a achieve a sufficient scale and stage, then we can also have direct conversations. Yeah.
Okay.
I think we have the benefit of being a private firm run by one guy who is, who thinks that crypto is going to go from 1% of our assets to 20% of our assets over time, and is spending time on marketing to get that message out. So we just get contacts that way, and then by doing events like this and through our investments in other venture capital firms, where generally, since we're invested in kind of earlier stage firms, a lot of times they don't have the firepower to take advantage of their follow-on rights. So we kind of stand behind as co-investor to take up some of those rights.
Okay, understand. I'm asking because before, when I was running Rockaway Ventures in the Czech Republic, deal flow generation was relatively easy. The founders, the other VCs, and then the deal flow comes naturally. But here in crypto, it's global from day one. Yeah? And I find it kind of difficult. How do you actually on a global scale generate deal flow? And I think what really helps us is, of course, the fund-of-fund strategy, because we are investors, so of course we share deal flow as well. But also what I see is helping is, for example, the staking, because we are running the servers, running the validators, so through Discord, the IT guys who are actually in those communities, they tell us, hey, have you seen this solution or that solution? It's also the labs, because they are developers, and it's also the smart contract audits, because they are auditing a new smart contract, they say, hey, it's very well programmed. You guys should look at it. or the other way around. Yeah.
Yeah, I was going to say that it's kind of like investing across the capital structure where I own in my fund 9 layer 1 tokens. I'm speaking to those management teams, reasonably frequently, the labs, as you say, and then I'll get our VC partners on the line and, hey, can you go through the top 10 projects that are being built on your protocol and who needs capital and who doesn't, and that's a very efficient way to get a download of who's for sale.
Exactly. So it's much more basically virtual, like online. Yeah, we are always online in Discords. Like, geography does not matter anymore. That's why we also saw on the last slide that Americans are investing much more in like European blockchain startup because it's easy through Discord to just reach out the founders here. Yeah. And then when you invest, like, are you focused on equity only? Do you do tokens? Do you do SAFTs, like simple agreement for future tokens? Do you do equities plus tokens as warrants, or you do across like anything?
We're set up to do token investments, so we could do it technically. We've never had to, so we've only done equity investments so far, but really not opposed to and ready to do it.
We focused on equity investments. We're actively exploring, the possibility and the actual methodologies of investing and holding tokens as well, because obviously it's a growing share of the target addressable market, and so that I think we have to figure out a solution.
So the tokens as well, yeah?
Yeah.
But maybe there are some regulatory issues, like
Yes, exactly.
in terms of like fund setup and etc.
Yes.
Adam from our team will explain like, how he set up a DeFi fund. Took him 9 months just from a regulatory perspective to figure out the right jurisdiction, and in Europe it's not easy. Yeah. So I agree with that. Matthew?
Early in seed stage, we prefer equity, but have done all kinds of deals that include rights to future tokens, et cetera.
And also secondaries, you just buy off exchanges or OTC or via market makers some tokens. You do that too?
Well, we have a limited partnership that is only buying tokens. So there may be some synergies in the future where we can make early stage deals that comes with right to future tokens that could go into the token fund, not the VC fund. So there's a lot of flexibility that we can do.
Yeah, because the tokens represent like easier liquidity, as in a traditional venture. So that's why, like, I didn't say it during the keynote, but 2/3 of our portfolio is actually tokens, and 1/3 is equity. And then the exit is relatively easier, provided it's a good investment, because then, Terra, for example, has 3 billion trading volume per day. So, if you exit, I don't know, 30 million, like, you would not actually dump on the market so much, but you could still, because you don't want to do that as a long-term holder. So that's why we think like tokens is like very interesting, actually, investment vehicle. And I think in the new fund we'll be more and more focused on that. But still, you have to solve the regulatory issues.
Are you hedging when you get these tokens at an early stage? Sometimes they moon really quickly. We've done some pretty complicated hedging strategies to try to monetize those situations. Are you doing that as well?
We don't do hedging, but sometimes we always stake our investments because it's an important income stream for the fund. For example, Solana generates around 7% per annum staking yield, and Terra generates around 8% per annum staking yield. So we always stake, but when you stake, your stake is locked for an epoch. An epoch in Solana is 3 days. Even 3 days is sometimes too long in crypto markets because of the volatility. But Terra is locked for 21 days, for example. So sometimes when we want to exit a position, we have to borrow the tokens we want to exit for that period while we are locked from someone. And then we basically sell their position. We pay a large interest rate during that 1 month period. And then we basically give them back our tokens. Yeah. What are the segments that you guys are excited about? In terms of the landscape, which I explained and we discuss here, NFTs, DAOs, social layer, Web3, or is it like we discussed, like the exchange and the cash flow generating businesses? What are the most interesting segments for you?
So we really see it across the board in all the categories we invest in, right? So For me personally, I focus mainly on fintech. So I think one thing that we're very excited about and actually recently did an investment in is how decentralized finance and encrypted money flows can sort of disrupt how people use banking or how companies use banking services. But there's a number of trends that we are monitoring and tracking, and that's sort of a moving target, obviously. But what we'd always be more systematically looking for is sort of mission-driven founders that are really dedicated to the problem and the pain point that they are addressing, and that they are in it for the long run. And we'd like to see a sort of mix of expertise and vision and ambition to take the company really, really far. So this is how we would assess companies in the space.
Okay.
Yeah, I think we look at all categories. We observe, obviously, things are changing very fast. So, it's just current state. But generally, I think from KKR perspective, we're most excited about the picks and shovels infrastructure sort of use cases and layers. Probably not sort of betting on specific types of cryptocurrencies or NFT projects, but actually, tools and infrastructures that enable more and more people to get access to NFTs or these new types of assets in general. So I think anything that helps ecosystem participants become more efficient, compliant, secure is what we like. For example, on-chain analytics, tax audit, security audits, KYC, developer tooling, security, privacy tooling, interoperability infrastructure, NFT infrastructure, I think is much needed, right? Not just the projects, but actually UI, UX, and developer layers.
That like marketplaces, for example. OpenSea is a cash flow generating business, hugely.
Yes. And I think for me personally, I like also like big vision sort of projects and founders that go beyond some of the currently very hot areas around financial services and TMT. I do think that blockchain has also the potential to disrupt many other industries. So renewable energy, real estate, I think there's not enough funding and innovation happening yet. And so I do like to support early founders as well in those.
You mean like securitization of real estate?
For example, or like, thinking about how you can decentralize the energy grid or energy accounting, right? I think it's very interesting. Vertical integration of energy supply chains, how we can use blockchain system. So there are interesting founders working on interesting.
We should also talk because like the securitization of real estate will be core of our Surfhouse DAO. Because as I said, with like the NFTs, the amount of capital you raise by NFT issuance, you cannot use it to buy real estate. So then we have to issue like a separate security token to tokenize that real estate, and then the DAO would then basically rent the membership from, So we should talk about that. Matthew?
So I guess at the early and seed stage, as I mentioned, it's non-US exchanges, basically, on-ramps and off-ramps. At the liquid token side, one of the first things I did after joining VanEck was create a taxonomy. So we made 8 sectors, essentially, kind of like a GICS layer 1. We found that framework is really lacking in the market. There's a lot of research providers who put out investable baskets, but the categories aren't mutually exclusive. You can't really measure performance like you can in equities. So we made this sector framework, 8 categories, and then did a deep dive on the top constituents in each category, and the performance divergence is incredible, right? So like in the last year, the smart contract leaders category is up, 40, 50%, DeFi is down 60%, right? How does that happen when like the entire value proposition of blockchain, or the largest value proposition, is faster and easier way to trade, right? It is a financial services at the end. But when you see that huge discrepancy in performance, and then the valuations also, right? The DeFi protocols are so much cheaper. And we kind of scratch our head, well, why is that happening? And it goes back to that long term, the 3 to 5 years, who's got the big TAM. It's not, any kind of given DEX who can just be copy-pasted by someone else.
Yeah.
It's going to be the layer one, and it starts with Bitcoin. So what am I most excited about? El Salvador, Bitcoin legal tender.
Yeah.
Like hopefully we're going to have 2 more countries this year. What Terra's doing with, introducing Bitcoin as collateral for their US dollar stablecoin. These are kind of layer one applications, and that's why our first liquid fund is a layer one fund.
Okay, interesting. I don't want to give out too much alpha here, but we definitely think DeFi blue chips are incredibly undervalued. And I think it's because, most of these markets we invest into are kind of public markets because the tokens are traded, so they are a lot subject to sentiment. Yeah? And we think there is a tremendous opportunity just basically checking the immediate valuation versus where we think the real value is. And currently it's definitely on DeFi.
Yeah. Do you think that's more of an activist model, right? It's a bit more hands-on. I mean, there is a lot of value to unlock. We saw a lot of mergers, basically, in the last couple months.
Yeah.
But from a sector perspective, if you had to bet on a sector.
Yeah, that's a great question. I actually think that's why, I completely underestimated the complexity of being a Web3 VC when we started, because you have to be super IT on a low level and understanding of the smart contracts, but you also have to be an activist hedge fund manager on the kind of liquid investments. So you have to. That's why we have a team of 20, yeah. And basically we're still missing kind of the hedge fund know-how, yeah. But you definitely have to cover much more know-how. I want to keep some time for questions, but maybe before we start, one last question from me. Please give us feedback, us, the blockchain and Web3 guys. What is the biggest challenge you see for us?
For crypto companies in general, yes.
Yeah.
I think the one that we see that are quite obvious, I mean, there's regulation. I think there's also, customer trust in the technology and ease of use. I mean, I think, this morning you mentioned your dad is still not using crypto. Yeah. If you look at what it takes today to actually buy some crypto, the workflows are still very complex. And we're far from having an intuitive, seamless, and easy way of, buying crypto or leveraging the technology. So there is a long way to go before we can actually reach the mass market, right? And I think that's a big thing where we'll see improvement in the coming months or years.
I understand. So we should be less hunting, how to get rich quickly on the tokens and more focus on developer tools, infrastructure, and simplicity. Yeah.
I think that's key. Yeah.
Okay. Thank you. Xiao.
Yeah, for me, it probably 5 things, 5 key risks or hurdles. Regulatory clarity and fragmentation, for sure, probably the biggest, but probably outside of the control of the Web3 community. Scalability is obviously being heavily worked on, heavily invested in, but still a long way to go. I think cybersecurity is a very big issue, for mainstream adoption, mainstream sort of financialization of the sector. I do think maturity of the developer talent base still has a long way to go. There's simply not enough people, and there's lacking sort of common frameworks, programming language. I think there's still a lot innovation to become. And then, as mentioned, price discovery. I think it's also just how to come to the right evaluation of what the actual value of these things are is important. I think longer term, one fundamental intellectual risk, obviously, is the risk of quantum, right? So a lot of the cryptography and the ways how we currently guarantee the security of blockchain systems will be fundamentally challenged once quantum becomes
on the proof of work. Yeah.
Yes. Okay. Yeah.
Okay, great.
Just an idea.
Matthew?
I don't know about advice because I wouldn't criticize a thing that you've done, but this industry has been characterized by pure alpha, right, over the last 10 years. And as it matures, many of your clients are going to be looking for lower cost beta alternatives. And, to what extent will the crypto native VCs, pivot down that road of, maybe the incentives aren't there because it's lower fees, but I think your clients will. So, developing that expertise or finding, who to hand off your LPs to for, liquid beta alternatives.
Cool, understand. Thank you. Any questions from the audience? Yeah. Do we have a mic or?
Yeah, hi, Patrick Martin. I would be interested, so especially this is for KKR index, because I think it's been in the space a little bit longer. How long have you been sort of tracking the space, and how many investments have you made so far in blockchain?
Yeah. So we've been investing in blockchain for a number of years because I think it was 2018 that we actually restructured our fund to be able to invest in tokens and sort of prepare the ground to be active. I don't know the exact number of deals, but if we only looking at the past 6 months, I think we probably did a deal a month in the category. So, it's quite active, and we have 2 members of the team that are full-time looking at the space, and the rest of the partnerships that's still like embedding crypto in how they look at their own sectors. So yeah, definitely accelerating as well. Yeah.
For us, a bit less, probably a handful of direct big ticket investments and sort of LP investments, but a lot more to come, hopefully.
Cool. Dean?
So you gave the example, and Surf House is interesting, of real estate integration. We took a look at that, and an interesting problem with real estate, at least in the US, is title infrastructure of, you go down and register a house, and if someone wants to place a lien on it, they go down to the courthouse and they put a lien on it. The permissioning and the authorization of who can place a lien is just completely different than what you could implement in a blockchain. So there's this impedance mismatch between what we can do in a blockchain and kind of how the quote real world works there. I'm curious whether you've encountered that in the Surf House thing, and then more generally for the panel, whether there's, real estate is sort of an example of processes in the outside world will have to change to integrate into blockchain. I'm curious whether you have encountered others of those, and if so, what are you doing about it, or how are you enabling entrepreneurs to sort of do that kind of reinvention of those areas?
So we have not encountered it yet because it's a bit different. But I spoke to CEO of Propi. I don't know if you know Propi, and they actually try to disrupt this market in the US of the titles, and they told me you basically it's a B2G. It's like you are selling to a government. Yeah, you are selling like to a local agency which is doing the. It's actually, and the sales cycles were just basically like 2 years. Yeah, so spend 6 months, you sell a pilot for $50,000, and then basically maybe it never happens. Yeah, so they had like 10 pilots, $50,000 each. $500K revenue over multiple years. At one point, you just stop. Yeah. So that's it.
So how can you help make that transition happen? Because it's a huge market,
Yeah.
and there'd be strong value in title getting real authorization and high integrity, which it frankly doesn't have right now.
Yeah. Well, I think, like, how much time can you spend changing government officials' mind? Yeah. at one point.
How do you work around these things?
Yeah. I don't know answer to that. I think regulations are definitely catching up. We have a session later today with Brian Brooks. I think we need like simplified regulation, and I think we also need to do a lot of education, yeah, and media needs to communicate a bit less on like the price volatility and the booms and the busts of this market, and more kind of the value that fundamentally this technology is providing.
Yeah, I think where it's interesting is there's clearly an opportunity for crypto servicing intangible services, right? So legal contract certification and ownership of real estate. But in this specific case, indeed, as an investor, you'd be looking at distribution and time to market, right? Like it feels like there's an obstacle because of the type of institution that you need to sell to.
Yeah.
Yeah.
Agree with that. Cool. Well, we are out of time, unfortunately, but thanks a lot. Thanks a lot to the panelists again. Appreciate it.
Thanks, Victor.
Thank you.